2008, the global financial system began to fall apart because of a massive crisis in the banking world. As large banks collapsed, people lost their homes and their savings, leading to a total loss of trust in the government and financial institutions. During this chaos, an anonymous creator named Satoshi Nakamoto released a digital document proposing a new kind of money that didn't need a bank. This was the birth of Bitcoin, a system based on math and code rather than the promises of a central authority. While the early tech world was beginning to experiment with this magic internet money, two brothers in America were fighting a very different kind of battle. Tyler and Cameron Winklevoss were famous for their legal war with Mark Zuckerberg over the creation of Facebook. They claimed they had the original idea for the social network and that Zuckerberg had used their plan to build his empire. After a long struggle, the brothers were offered a $65 million settlement to end the lawsuit. Their lawyers told them to take the cash and leave, but the twins insisted on receiving a large portion of the payment in Facebook stock instead. This was a very smart business move, as the value of that stock eventually grew to be worth $500 million. However, their massive wealth didn't help their reputation in the tech industry. In Silicon Valley, they were seen as dumb jocks who had simply sued their way to a fortune. They wanted to use their money to become investors in new startups, but they soon found out that no one wanted their help. Because of their history with Zuckerberg, young founders were afraid that taking money from the twins would make Facebook refuse to work with them. Their money had become toxic, and they were essentially banned from the most important business hub in the world. To escape the pressure, the brothers traveled to the island of Ibiza for a vacation. While they were at a club, a man named David Azar recognized them and approached them with a new idea. He told them about a revolution happening in the world of money called Bitcoin. At this time in 2012, almost no one knew what Bitcoin was, and it had only been around for a few years. The twins had studied economics at Harvard, so they were able to quickly understand the business potential of this technology. They realized that Bitcoin was like digital gold because it was scarce, portable, and hard to fake. Unlike regular dollars that a government can print at any time, there would only ever be 21 million Bitcoins in existence. This fixed supply meant that if the demand for Bitcoin went up, the price would have to rise significantly. The brothers decided to take a massive risk on this unproven technology. They began buying as much Bitcoin as they could find when the price was still below $10 per coin. They eventually bought around 200,000 coins, which was roughly 1% of the entire world's supply at the time. To help manage their investment, they also put $1.5 million into a company called BitInstant. BitInstant was a startup run by a young entrepreneur named Charlie Shrem that allowed people to buy Bitcoin quickly. Before companies like this existed, buying Bitcoin was a slow and confusing process that involved wiring money to unregulated exchanges in Japan. The business of BitInstant was growing fast, processing millions of dollars in transactions every day as the popularity of digital currency started to spread. While the twins were trying to make Bitcoin professional, the currency had a very dark reputation. In the early days, it was mostly used on a secret website called the Silk Road, which was an online marketplace for illegal drugs and other prohibited items. Because Bitcoin allowed people to send money without a bank, it was the perfect tool for criminals who wanted to stay hidden. This created a conflict within the Bitcoin community. The Winklevoss brothers wanted to bring in government rules and regulations so that normal people and big companies would feel safe using it. However, many of the early users believed that the whole point of Bitcoin was to have total freedom from the government. They viewed the twins as suits who were trying to take over their rebellion. This tension became very real inside their own investment, BitInstant. Charlie Shrem was enjoying his new fame and spent much of his time partying rather than focusing on the legal side of his business. The twins warned him that he needed to be more careful about who was using his platform, but he ignored their advice. In 2013, the government shut down the Silk Road and arrested its owner. Soon after, the police also arrested Charlie Shrem. He was charged with helping people trade money that was used for illegal purchases on the Silk Road. Shrem became the first Bitcoin felon and was eventually sentenced to 2 years in prison. Around the same time, the world's largest Bitcoin exchange, Mt. Gox, collapsed after hackers stole hundreds of thousands of coins from its customers. It looked like the Bitcoin experiment was failing and the twins' investment was going to zero. But instead of giving up, they decided to build their own system from the ground up. They founded a new exchange called Gemini, which was designed to be the most regulated and safe place in the world to trade crypto. They wanted to prove that you could follow the rules and still be part of the future of money. While other companies were cutting corners, Gemini focused on gaining the trust of the traditional financial world. They believed that for Bitcoin to succeed, it needed to be treated like a real asset by banks and large institutions. The turning point for their investment came during a banking crisis in the country of Cyprus. The government there was so broke that they began taking money directly from the bank accounts of their own citizens to pay off national debts. When people saw their savings disappearing, they realized the danger of keeping all their wealth in a centralized system. Investors around the world started looking for a way to store their money where a government couldn't touch it. This caused the price of Bitcoin to skyrocket. It went from a few dollars to hundreds and eventually thousands of dollars per coin. Because the brothers had never sold any of their original 200,000 coins, they officially became the world's first Bitcoin billionaires. To understand how this worked as a business, you have to look at the system of mining that keeps Bitcoin running. There is no central office for Bitcoin. Instead, thousands of computers called miners all over the world compete to solve complex math problems. When a miner solves a problem, they verify a block of transactions and are rewarded with new Bitcoin. This process is called proof of work, and it ensures that the ledger of who owns what can never be faked. Every 4 years, the reward for these miners is cut in half, which makes new Bitcoin even harder to get. This system creates a digital form of scarcity that mimics how gold is mined from the earth. The success of the Winklevoss brothers changed the way the world looked at crypto. Big financial names like BlackRock, Fidelity, and even companies like Tesla began to follow their lead by adding Bitcoin to their own balance sheets. Countries like El Salvador even started using it as their official currency to help citizens avoid expensive fees when sending money home from abroad. However, the debate over Bitcoin is still not over. Famous investors like Warren Buffett still call it a fraud because it doesn't produce anything like a farm or a factory does. They argue that the value only goes up because people hope someone else will buy it for more later. Despite the criticism, the Winklevoss twins have moved beyond just owning Bitcoin. They are now investing in Web3, which is a plan to build a decentralized version of the internet. Their goal is to create social networks and apps that are owned by the users, rather than giant corporations like the one they helped start at Harvard. Some people believe this is their way of finally getting revenge on the system that once rejected them. They are using the wealth they gain from Bitcoin to build a future where no single person, like Mark Zuckerberg, has total control over the world's information. The story of the Bitcoin billionaires is a lesson in how the business world can be unpredictable. The twins were once viewed as the biggest losers in tech history, but by spotting a new system early and having the patience to hold through many crashes, they became more successful than anyone imagined. Some say they were just lucky to have the money from their settlement to buy in early, while others believe they had the vision to see a revolution that everyone else missed. Regardless of how you view them, they proved that a different kind of financial system was possible. In the end, Bitcoin's greatest strength has been its ability to survive every threat. It has been banned by governments, attacked by hackers, and criticized by the world's richest men, yet it is still here. The system that started as a simple PDF file during a global crisis has turned into a trillion-dollar industry. It has rewarded those who were willing to think long-term and trust in math rather than people. Whether Bitcoin becomes the future of all money or just stays as digital gold, the journey of the people who bet on it has already changed the rules of business forever. The system is no longer a secret experiment. It is a global reality that is still growing every day.